Well, today is September the 2nd, and we've entered the bear months where the first day of trading prior to the last trading day of the month of August, we were met with a contagion that spilled over towards the opening day of the market. European indices are fluctuating between gains and losses in a tight range, while US futures point to a rebound, which is actually happening right now. Global growth are expected to remain moderate and would likely be weaker than anticipated. Forces are in play, as we have made mention in our previous article and analysis, that certain secular forces are in existence, especially so with the volatility increasing day after day. A weaker than expected recovery is for the advanced economies and further slowdown in emerging markets, especially in the Latin American area, where even the head of the IMF, the International Monetary Fund, mentioned that Asia's growth was turning out slower than everyone would have expected. And this may slow even further due to the recent decline, especially in the contagion of the Chinese market, where global risk aversions and financial market volatility are in play. Again, China is unwinding some risk which was built up in recent years, which is quite complex. However, with that said, what we have here is the US dollar index. As you could see, it's working at the 95.90 level, where the ADP numbers on jobs added was within or slightly below the 210 expectations, where 190 was delivered. Looking at simply at the price action analysis as shown here, it may be quite colorful, but however, this is how we put things into perspective, especially when it's color coded. And the chart follows a wide consolidation, as you could see here, where we already have a parallel channel that we have drawn, especially on the downside, a rising channel here on the mustard color, where we also have the three basic patterns of a Gartley formation, where a bullish Gartley here had been formed. On the blue side, it is the bearish, and on the pink side, well, the reason why this one is really narrow is because the 1, 2, 3, 4 days of movements, which is the contagion that the Chinese market have made, also drawn the US dollar into negative territory. As you could see that this chart follows a wide consolidation, where the top registered here in April at 100.39, while the low registered here during the time that it went down along with the Chinese market, where we call the Black Monday, registered in 92.62 basis point, and on that basis have already recovered to this point. Now, with that said again, we could see that the overall scenario for this movement is still positive on a bigger perspective, where we could show you the weekly formation, of the US dollar index showing here, well, it may be a little bit complex, but let us try to widen it a little bit. So this formation shows a pole and a flag formation, which obviously would be on the high side, although it would have to be confirmed once the 98 level would be touched and penetrated on the high side. But then again, with that long tail down at 92.62, that will always have to be um, retraced back. There will always be a retracement. There will always be a major correction within a major trend. So eventually, on the longer perspective, while although it's within the rising trend channel, rather, the trend higher would still prevail, especially so if this particular spike formation would extend closest to the 98 level, and anything beyond that would be a break on the high side. If we look at it more closer, it is within the time scale or time cycle rather, where we have made and drawn to this conclusion. This is more on an overall general view, so our constituents would be able to understand in the most basic summary that we could present. So far, we're sharing this with you, and hopefully this would be rather this would help you to be able to determine as to where the dollar direction would be in the longer perspective. At this point in time, we would like to say thank you for bearing with us, and would like to share this moment to say only the best for your trades.